Well, joining us now, ahead of the conference call, Aurora Cannabis CEO Miguel Martin. Miguel, thanks for joining us with these earnings fresh out, these numbers fresh out. I just want to start with the cannabis flower prices. That 42% jump in prices. What was that due to?
Well, I think it's due to the strength of our medical business. You know, we're the #1 Canadian LP in terms of international medical sales. And when you look at the margins in the mid-60s, which have been very steady and have a lot of stickiness to it, you see a lot of strength there. We really pivoted into the areas and where we can be profitable. #1 in flower in Germany, huge shipment into Israel, and doing exceptionally well, #1 in the Canadian medical business. And I think focusing on those areas where you can make money, which is more and more so the medical business, which is affordable and responsible as opposed to chasing on the rec business, I think it's a big part of our turnaround story.
Yeah, and certainly you reported an adjusted EBITDA loss, but it narrowed. In terms of that path to profitability, what does that look like, and when do you expect to actually turn a profit?
Well, it's a great question. So we announced 60 to 80 million of incremental saving annually. We last week had some tough news, but had to announce some layoffs and some infrastructure right sizing. We believe that with no change to the Q4 revenue, on top of the 300 million we already announced, we can be EBITDA positive just with the efficiencies. And so we're well on our way to do that. We're not going to sacrifice any sort of upside. And again, it's really built on the strength of our medical business, which is one of the strongest in the world.
The restructuring news, is that the reason that you rescheduled earnings?
No, we just had a couple numbers to get through. We were still within the time frame, and so we thought it was prudent to do that, and so it had nothing to do with that. We announced last week, in 2 facilities that were really redundant, mostly because of infrastructure we now have in Europe that's come online and some other things. So it had nothing to do with those announcements.
Miguel, just thinking ahead to what some of the analysts might ask on the call, given what some of them have been writing about of late, have you considered exiting domestic recreational and focusing on medical and international?
No, I think it's a great question. I know everyone is so consumed by what's happening in the U.S. and the rec business in the U.S. It's a big world out there, and in my opinion, and I think we've been proven right, the U.S. is going to take a bit longer, and so medical is really critical. If you look at the vote in Germany, we're really sort of pleased with that outcome, and so we believe there's a pathway from medical into rec. Now, rec in Canada really has 2 sides of it. First is low profit, low margin, discount flower, and that's just not a place where we think anybody can make money long term. But on the other side of it, premium flower, premium concentrates, you see significant margin there, and that's really where we're going to play. So we think it's important to have a relevant rec business, but chasing market share, particularly in Canada, just to say that you're 1, 2, or 3, we don't think is a path towards profitability.
Yeah, and sticking with the theme of analysts, coming into this report, a number of analysts raising concerns about your cash position. I mean, just looking at your balance sheet and the numbers you reported here today, do you have enough to get to that point of profitability?
We absolutely do. So the cash balance sheet has never been in a better place with over 400 million. We have ATM of over 1 billion US. And, it's a lot different when you're burning cash than if you're EBITDA positive. And so we don't have any big CapEx needs. We don't have any big uses of cash unless there's something to be opportunistic. And so we've made, significant investments over time in our medical business around the world. And so we're now being able to take advantage of that.